CRV Finance's decentralized exchange is now one of the most popular platforms for stablecoin trading among farmers and liquidity providers. CRV's liquidity pools are designed to reduce leaks, trading costs, and the risk of losses due to changes in cryptocurrency prices. Its management token, the CRV DAO token, is popular among cryptocurrency stakers who earn 50% of all trading fees on the CRV Finance platform. In this video, we will talk about this cryptocurrency in more detail, so stay tuned, it will be interesting. We'll also leave you a link to buy the CRV DAO token in the description below this video. So, let's go.
Automated market makers are having a significant impact on the crypto environment. They are seriously demonstrating their capabilities in stablecoin trading. Liquidity platforms such as PancakeSwap, Balancer, and Uniswap allow anyone to become a market maker and earn rewards in return. CRV DAO token is a DeFi aggregator that allows people to attach their valuable assets to various liquidity pools and receive rewards. It is an AMM protocol used to exchange stablecoins at a lower price and with slippage. CRV DAO token's ideology is to offer a high-value asset exchange solution on the Ethereum blockchain. The protocol is not a year old, but it is now the third largest DeFi platform. This is because it has a large amount of blockchain value. CRV DAO token has a token known as CRV. It serves as a management value. The market value of the token at launch was slightly higher than that of a Bitcoin.
CRV Finance was created by Russian physicist Mikhail Yegorov. Yegorov is a seasoned cryptocurrency veteran. He began by investing in Bitcoin during its peak in 2013, and despite losing his initial investment, continued to use Bitcoin as a means of transferring money across borders and even briefly mine Litecoin.
In 2016, Yegorov founded NewCipher, a fintech company specialized in encryption. NewCipher evolved into a blockchain cryptocurrency project that raised more than $30 million during its 2018 ICO and raised another $20 million in private funding in 2019. Unfortunately, the new token is not currently listed on any major exchanges. In May 2020, CRV Finance hinted that it would release its CRV management token. In the interview, Yegorov said that a big part of the move to a decentralized autonomous organization was to get around any legal issues the CRV Finance team might face. The current CRV Finance team is based in Switzerland and consists of 5 people, including Yegorov. Of the remaining 4, 1 is a developer and the other 3 are in social media and marketing.
CRV Finance is a decentralized exchange built on Ethereum. It is specifically designed to provide efficient trading between cryptocurrencies of equal value and provide a high annual percentage return on cryptocurrency funds deposited into CRV Finance by liquidity providers. The recent release of the CRV management token has turned CRV Finance into a decentralized autonomous organization. CRV Finance can be thought of as a series of asset pools. All of these pools contain cryptocurrencies that have the same value.
Right now, 3 of the 7 pools on CRV Finance include stablecoins and other 4 include different versions of wrapped Bitcoin such as WBTC, RMBTC, and SBTC. These pools can yield incredibly high interest rates on deposited funds, currently generating over 300% per annum for liquidity providers. CRV Finance uses these deposited funds to provide liquidity for other DeFi protocols such as Compound. This generates interest in Complex, and CRV Finance essentially passing that interest on to liquidity providers, plus reducing trade fees from the CRV Finance platform, plus some CRV tokens. Yearn.finance takes this to the next level by using CRV Finance to automatically exchange stablecoins for CRV Finance pools with the highest yields. Unlike many other DeFi protocols, CRV Finance is very honest about the potential risks of using their platform. CRV Finance's DEX code has already been verified twice, and the CRV token contract and DAO have been verified 3 times.
CRV DAO token as an AMM that facilitates automated and unauthorized trading of digital assets. It uses liquidity pools and does not allow trading between buyers and sellers. A liquidity pool is similar to a common bundle of tokens with token prices calculated using a mathematical formula. Tokens in liquidity pools are provided by users. The use of mathematical formulas helps optimize liquidity pools for different purposes. Users who own ERC20 tokens with an internet connection can provide tokens to the AMM liquidity pool, and then, by doing so, become a liquidity provider.
The liquidity provider receives rewards for supplying the pool with tokens. These rewards are paid by individuals or users interacting with the pool. The CRV DAO token protocol reduces leakage to a minimum. 1 USDT should be equal to 1 USDC, which should be roughly equal to 1 BUSD, etc. Then, to convert $100 million of USDT to USDC, you first convert it to the BUSD. Of course, there will be some slippage. The CRV formula is prepared to reduce the slippage to a minimum. Notably, the CRV formula will not be effective if the stablecoins are not in a similar price range. The system is not designed to fix things out of its control. The formula works only as long as the token price is maintained.
If you were to picture an automatic market maker equation, you would see something known as a relationship curve. It shows that the more an asset in a pool is bought compared to others, the more expensive it becomes, rising exponentially to a theoretically infinite price. This makes it almost impossible for anyone to buy all the cryptocurrency in the pool and gives arbitrage traders more incentive to come in and rebalance when the ratio between the pool assets deviates too much.
CRV Finance uses a unique built-in curve, unique because it is designed to reduce the price to a narrower margin. As a result, this curve looks more like the side of an octagon than a real curve. Simply put, it gives you more room to deviate the ratio between the stablecoins in the pool. This means you can buy more without slippage. CRV Finance has extremely low slippage because of its unique connection curve and the incredibly high volume of cryptocurrency deposited by liquidity providers. Egorov claimed that you could easily trade over 5 million on CRV Finance and get a slippage of less than 0.4%. Imagine if you tried to buy that amount of stablecoin on a cryptocurrency exchange. You would destroy your order books after a large slippage.
CRV is an ERC20 token used for management in the CRV Finance DAO. Although DEX itself cannot be changed, CRV holders can log their CRV to vote to add new yield pools, change existing commission structures, and even introduce token burn schedules for CRV.
Voting power can be increased depending on how long CRV tokens are locked. The current maximum lock-in period is 4 years, which gives 2.5 times the voting power to dedicated CRV holders. Any user with a minimum of 2,500 VCRVs can submit a proposal by posting it on the CRV Finance DAO Governance Forum. A minimum of 33% of existing VCRVs must be on the ballot for the proposal to be considered, with a 50% voting quorum. Any changes to DEX parameters are done by the CRV Finance team. The CRV Finance DAO itself is built using Aragon.
The CRV token did not have an ICO. Instead, the token had a surprise release on the 13th of August, when Twitter with handle 0xC4AD suddenly rolled out a CRV smart contract, paying over $8,000 in Ethereum gas fees. They were able to do this by using the code on GitHub CRV Finance as a reference. The team initially rejected the launch of the token, but unexpectedly accepted it as legitimate after verifying the code.
The total number of CRVs is just over 3 billion. 5% of the CRV will be released to address that provider liquidity to CRV Finance before the launch of the token, in proportion to how much liquidity they provided. These funds will be unlocked gradually, daily, over 1 year. Another 5% will go to CRV Finance DAO reserves. 3% will go to CRV Finance employees with the same unlocking schedule as the early liquidity providers, and 30% will go to shareholders with 4 years and 2 years of experience issue period, respectively. The remaining 62% of tokens will be distributed to current and future liquidity providers on CRV Finance. 766,000 CRV will be distributed to liquidity providers each day. The daily amount will decrease by 2.25% each year. If you do the math, that means it will take about 300 years to issue all the CRV tokens.
CRV originally traded at $1,275 on Uniswap immediately after launch. This was because the AMM Uniswap equation works in much the same way as the Curve Finance equation. This means that the low ratio of CRV tokens in Uniswap pools compared to other cryptocurrencies has given CRV such an absurd price.
As more tokens were added to the pool, the ratio became more balanced, so the price of CRV dropped accordingly. The price of CRV continued to fall for about 10 days and stabilized at about $3 by the end of August. Earlier in the month, the CRV jumped to almost $5 before falling to less than $2. That was along with many other DeFi-oriented tokens, whose price fell more than 50% in 3 days. CRV has since fluctuated around $2, showing a slight uptrend in recent days.
Believe it or not, Binance announced it would list the CRV token within 24 hours of the failed launch. By the 14th of August, CRV was trading on Binance and has since been listed on other reputable stock exchanges such as OKEX and Huobi. You can also get CRV on Uniswap, but you might be better off just farming it, providing liquidity to Curve Finance pools if you have spare stablecoins under your couch cushions.
Since CRV is an ERC20 token, you can store it in almost any wallet that supports Ethereum-based assets. CRV cryptocurrency wallets include Atomic Wallet, Exodus Wallet, Trezor, and Ledger. You can also use a Web 3.0 browser wallet such as MetaMask. This is especially handy if you plan to use CRV for voting, since you need a Web 3.0 wallet to interact with Curve Finance, DEX, and its DAO.
Thanks for watching this video. Check out the channel for new videos.